Welcome back. So the cues are, slightly weak, you can say, with Asia looking a little somber. But against that backdrop, this is not bad because the implied open seems to suggest that we'll get a bit of a small pop at start. So what about stocks? What should we watch out for? Well, our team is standing by to bring you the CNBC-TV18 list of top stocks to watch. Guys, hi, good morning to all of you. Rima, let's start with, L&T Tech Services. There was an investor call, I believe, yesterday. So what are the highlights?
Indeed. So L&T Technology Services held its analyst meet yesterday, and here are the key takeaways. One, the company reiterated their medium-term aspiration to hit $2 billion in terms of revenues and margins of 17 to 18%. They've also revamped their go-to-market strategy, and they're zeroing in on three verticals: mobility, sustainability, and tech. And they spent a lot of time showcasing their capabilities over here and how they plan to win in all these three verticals. In fact, they also said that later on, after they achieve their medium-term aspiration of $2 billion, their goal is that in each of these three verticals, mobility, sustainability, and tech, they want to achieve $1 billion each in terms of a revenue run rate. As for the near term, the management said the conversations and the pipeline has improved compared to last year, but deals are still taking time to close. Now, Motilal Oswal came back quite impressed with their go-to-market strategy. They say it opens up new avenues for growth, particularly in their automotive software development vehicles, where companies like KPIT March have, KPIT Tech have stolen a march over companies. So, Motilal Oswal believes that this approach opens up new avenues for growth. So they have a buy rating, but Nuvama thinks LTTS is a bit expensive, which is why they have a hold call on the stock.
Okay, all right, Rima, thanks a lot for that. Well, let's focus on the other L&T name, that's L&T Finance. Abhishek's here to run us through those details. Morning, Abhishek.
Morning, Nigel. So, Citi is holding a conference with investors. So, over there, the L&T Finance was present. So, Citi has written a note on the key takeaways from that conference. Citi has a buy rating with a target price of 221 per share on L&T Finance. The key management takeaways are that industry-wide, the MFI stress incidence is expected to dissipate by H2 FY25. Management is confident that there is no over-leveraging risk for its MFI borrowers. Remember that 37% of the MFI borrowers are first time to L&T Finance, 64% have up to 2 association, and 76% have no other non-MFI retail lending overlap with them. So management is cutting down on disbursements to over-leveraged and overdue borrowers. Focus is on reducing the concentration risk in the portfolio. Home loan lead generation impact will be visible in next couple of quarters, and they are confident of a credit cost guidance for FY25 being between 2.25% to 2.5%. Remember that in FY24, their overall credit cost was about 2.67%. So they expect improvement in their credit cost in FY25 versus FY24. Back to you.
All right, Abhishek, thanks very much for that. So that's L&T Finance in focus. Bharti is going to be the next one, which we are talking about. Rima has got more details. Rima, over to you.
Well, we're watching Bharti Airtel today because Indus Stars has now become a subsidiary of Bharti Airtel. Now, earlier, Bharti Airtel had a 49% holding in the company, and now they've managed to cross the 50% mark, 50.005%. Now, this happened because Indus Stars, remember, did a buyback, which just got concluded recently. They bought back 2.1% of the equity. Now, Bharti Airtel did not participate in that buyback, and by not participating, their effective shareholding in the company went up by a little over 1%, helping it cross that 50% mark. So it was a very nice way for Bharti Airtel to up their shareholding in Indus Stars without having to spend any kind of money. So now Indus Stars is a subsidiary of Bharti Airtel. So the numbers from here on will, of course, change for Airtel.
All right, that's pretty interesting to note. Thanks very much for that, Rima. Let's get to Vamakshi, who's watching out for a bunch of stocks. I think PNC, Infra, NBCC, and Office. Vamakshi, off you go then.
Well, good morning. Let me first start off with PNC Infra. The company has been declared as the lowest bidder for a project worth 380 crores from NHAI, and this is for construction of an additional 3-lane bridge over River Ganga for connection between Buxar and Baroli in UP and Bihar. NBCC is the next counter. It is expected to open higher because a board meeting is scheduled on August 31st to consider issuance of bonus shares. Lastly, let's watch out for office space going with the green for this counter as well, and that is because the company has signed the largest managed aggregation, that is MA deal of 3 lakh square feet with the Nyati Group. And with this, the company now has a total of 500,000 square feet of grade A flexible workspace with the Nyati Group. The company will be introducing premium flexible workspaces in some of its prime commercial properties. So given this development, going with the green for office space.
Okay, very, very interesting. In fact, we spoke with the company just yesterday office. They were explaining how this whole managed aggregator model is asset light and it helps them expand very quickly. And they've done a deal in that space today. Thanks very much, Ramakshi, for that. Let's head across to Ekta now. She's watching out for Zydus Life and Lupin. Ekta, good morning.
Morning. Well, I'll start with Lupin, which has received a US FDA approval for a drug which is used for ophthalmic purposes. It is the generic Alphagen. It is used to release elevated intraocular pressure or patients with glaucoma and hypertension. Estimated sales $178.5 million. Zydus, they've received final approval from the US FDA for a drug which is basically used for uncontrolled tremors in Parkinson's. It's a final approval for the 68.5 mg drug and a tentative approval for the 137 mg drug. The approval, according to the company, makes them eligible for 180-day exclusivity for the 68.5 mg version of the drug, and hence I expect both the stocks to see some green today.
All right, Ekta, thanks very much for that. So that's pharma stocks in focus, Zydus Life and Lupin. Some block deals. How can we sort of wrap up the top 10 without these blocks? Sudarshan has got details. So good morning.
Morning, Prashant. So I have two stocks with the back of block deals. First one is Tata Technologies. TPG Rise Climate has sold 3% equity at a price of ₹1,014 per share, and that's why I blocked this. As of June, TPG Rise had held 9%, so of 9%, it has reduced its stake by 3%. And amongst key buyers are Coptel Mauritius and Gisalo Master Fund. And before this, on August 23, also we had seen block deals in Tata Technologies. Alpha TC Holdings had reduced its stake by 2.4% from the holding of 4.3% that it held as of June. Second is Rolex Rings. Companies saw block deals of nearly 3% equity, and of this 3%, promoters sold 1.64%, and ICICI Prudential Mutual Fund has cut its holding by 1.2%. And amongst key buyers are SBI MF, Kotak Mahindra Mutual Fund, and Franklin Templeton. So keep an eye on these two stocks on the back of block deals.
Okay, all right, got it, Sudarshan. Thank you very much for that heads up. Well, let's quickly recap our list of stocks to watch today. The ones that have positive news flow around them are L&T Tech Services, L&T Finance, Bharti Airtel, PNC Infra, NBCC, Office Space Solutions, Lupin, Zydus Life Sciences, and Rolex Ring. Only one stock with negative news flow around it, and that is Tata Technologies.